Okay, good evening, everybody. I hope everybody had a nice weekend. It's August 6th, 2017. Welcome everyone to the Bar by Bar portion of the week, beginning of the week. So thank you for spending the time with me. As far as that goes, um, Tuesday night, of course, is the members only at 7 o'clock for gold and silver members, and Wednesday is the free stock night this week. Okay, we picked up the last couple weeks, picked up on that, working out pretty well. Okay, so I wanted to just reiterate that to everybody. Okay, um, are we? Sorry, my apologies. Okay, so let's start. Disclaimer. We go for substantial risk of loss of trade commodities for jobs to past form and indicative future results, the past the previous experience, the previous with Barbie. uh, the opinions of those of Gary Fellow GC, not to take recommendation buy or sell commodity options, based by teacher Richard D. Wyckoff. Okay, apologize, I had a little swallow something in the wrong pipe. Pardon me. Okay, so um, there's some interesting charts going on. And there's some charts that are really basically doing very little, which are extremely, extremely important. They're important simply because they have room to cause, room to grow, and room to cause, and everything. So those are very, very critical aspects of the trading aspect of the market. But the cause building, but they're on the right hand side, that hasn't really um, reacted yet. Okay, so that was something that I thought was important, and we've been doing a lot of that with the stock market, getting things of that nature done. So at least it's a portion where that's the case wise. So we'll see. Okay. So hopefully we'll get to a situation to where we'll begin to move as far as that goes, and then we can go forward there. Okay. All right. So before we begin, are there any particular questions that we need to know, or any questions that of interest wise are top people's minds? Okay. Okay. Let's begin. Email the S&P, and I'm gonna. This is the first week. Even though we've been in a few days of the week, the month. Let's do a monthly chart a little bit, huh? Let's do a little bit different. We'll see if we can see something long term, because as I said, it's very interesting charting. Okay, so we have a market in the monthly chart of the S&P. So something okay, something very interesting about the market, right? What's interesting about the market? Well, we have a market that's extremely bullish on the monthly chart, right? How? Well, we have basically any market that obviously makes new highs is somewhat in a bullish formation. But it really is important, if you go back, it happened with the first month of the Trump presidency, right? Right. And the thing is that what's very important is to realize that the market really has not had supply come into the market. Okay, and put the volume in, and we'll look at that more closely. Okay, and and the thing is, when you look at this market, when you look at these things in the market, what do you see? you see a market basically that has gone sideways, and the market has um, and the thing is, what's really important is what is that you see these little buying tails that are occurring. Okay, they're very very important, right? So every time the market tries to dip from the area of where the market's kind of stagnant, okay, you see the market springing to go higher, right? Boom, boom. Every spring here makes a new high. Every large range almost does it immediately. That's where that goes. Okay? So you go down, up, down. Market has lack of supply, small range, short of thrust. Demand wise, where that goes. So that's why. So that's why it's very interesting to see the market immediately boom, and these all act as springboards to the market. Okay, springboards to go higher. Springboards to go higher. And that's very important. Okay, and that's very very important, right? Because these highs, lack of supply higher, lack of supply higher, lack of supply higher. Okay, it's very very important. In this case, we didn't get the little spring here, but it almost acted like it was too strong to the market. The audience in and out. Let me see if I can do the way that is. So some people works out very well. Hey Tom, how is that better? Is that better? Okay. Sorry about that. Let me go back to where that goes. Um, so the thing is that every time this market dips lower, the act as buying tails to go higher. Dip lower, buying tails. Dip low, buying tails. Dip low, buying tails. And what's critical is that these springs now make new highs. Okay? So those are kind of like shakeouts or springboards to go higher. Okay? Very, very, very important. Boom, boom. So every time we've had a possibility of a top or weak action or a shorting of thrust, or as a result, the market immediately responded from the danger area. Okay? Very, very, very important, right? Very, very, very important. Okay. Market medium return. Now this is last month, and here's where the market may have a little difficulty here. Even the market's bullish. The volume is the lowest it's been in over a year. Okay, and the market closed higher. So what can we say about that particular bar last month bar? Okay, so we see lower volume. So we see lower volume, and we see a vertical move up. What we want to do is we want to take vertical lines and go across. What do you notice? You notice that the market is respecting the reverse trend line, right? And And the thing is that the market now is that we see the market in an overbought condition hitting the reverse trend line. And how we treat a reverse line, we don't treat this as a breakout, right? We treat that as an overbought or sold sign, and the market goes sideways. Okay? And so the market now gets to the point. My apologies. We had some guests in from Portland. I'm sorry, from not Portland, Olympia, Washington. Olympia, Washington. They have a 6-month-old baby. They were leaving. Anyway, so markets that are in go against vertical absorption to the side. Okay, they can relieve the condition by going sideways without having to give up any ground. Okay, market kind of did it right here. You see the market a couple months went sideways before working itself higher. Okay, so that's very, very important because just because a market goes sideways doesn't make the market bearish. And a lot of people, if you see a trend line, say people draw this trend line like this, let's just, for all practical purposes, right? We take a small trend line. Forget about this here, right? Well, if we have a market that goes sideways, and and 2 months from now, the market's right here. Market's right here. Okay. It will break this trend line, right? But it won't break a vertical, maybe demand bar, let's say, okay? Right? And the thing is the market now is in a situation where it can go side and not break a trend line. So people that draw these particular trend lines, okay, right? These trend lines, and they think a trend line breaks and there's no supply, it literally makes no sense, right? Okay. So that's why the supply is very, very important, right? Market-wise, because just because the market was a trend line without supply, it really doesn't make a heck of a lot of difference, right? Okay. So you see that behavior reaction. So we have to worry about the market having a lack of demand there, in the sense of the market didn't attract higher buyers or higher. But until that market gets supply, the market is bullish. Until that market supply, the market is bullish. Okay? So that is very, 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 very important. Okay, very important. So that's the monthly, and the monthly is in a very bullish situation. Okay, let's do the weekly chart of this. Like I said, I sent out the charts yet, but I want to wait. So the weekly is interesting. The weekly is interesting as well. And the weekly is interesting because the market shows the last 1, 2, 3 weeks of very clustered closes to the market, meaning that the closes are very similar to each other, right? Meaning the market's in kind of an equilibrium with each other. In other words, there's really nothing to move that market bullish or bearish out of the way. So when we see a market like that, what do we say about the market? Is it bullish or bearish? Is it bearish that we're doing this, or is it bullish that we're doing this? And that's obviously the question, right? Because the market builds cause for something. So we see our chart happening, and we see the market acting here. We've had 1, 2, 3, 4 cluster closes. The market broke, market cluster closed, and back up. Okay? Here's what's key about this, that we had no supply when we could have supply. Right? So again, proving that supply is necessary. Supply is necessary. Okay? For the market to break. So to me, at this point, even though the range has gotten smaller, okay, for the volume, even though the range has gotten smaller, the volume actually picked up a bit. So there is this little battle going on at the market, right, between bulls and bears. And again, the market's at what? Equilibrium. The market's going sideways. So we want to be able to see. So if you're presented a case like this, the odds favor upside until what? Until we see supply to the market. Even though the market may be acting tired, even your gut says, well, the market went up too much, too fast, too hard. Okay? The bottom line becomes the market lacks supply to the market. As long as the market lacks supply to the market, the benefit of the doubt goes to the upside. So the key will be, right, if we start to get under this particular low here, right, because those are probably what the stops are at, because this was the low before the market started working higher, right? Obviously, this one's important, right? But from a standpoint of where your initial stops are, it's here. Because at this point, we could see supply like this. We could see supply something like this, for example. Okay? Stay above the support line, but act like this. Okay? But the odds would favor that if we did an action like this, that this low will probably be taken out. Okay? So you, as a trader, you would protect by maybe getting out of position. If the market doesn't take out that low and holds, re-enter position. If the market does take it out, you're out before evidence gets out. So you treat this market as a bullish market until you get supply again, right? Again, here you see an up thrust, or potential stopping action power rather, that leads to no supply, that leads to no highs. Okay? So an up thrust in bull markets are pros to go higher. Okay? Very important. Don't assume anything. Okay? Don't assume anything, right? Don't assume that. That's don't assume anything. Okay? If you assume and you think the market's higher, okay, if you assume, then all of a sudden the market will take off and you'll be long. So the idea is to buy springs in markets that are bullish until you get that supply. And up thrust, look for some type of ending behavior to the market. Okay? So if you get a shorting of downward thrust, F of result, spring on the chart, time we're looking at, those would be a situation, okay, that are very, very important. Okay? So we get supply that means high volume, larger range, then we could have a change of behavior. Okay? So obviously I'm doing time frames charts, but I think they're obviously important, right? If we go to our daily chart, which is where most people start their look, I mentioned to you last week, and I mentioned in the newsletter all week this week, the newsletter, that last Thursday behavior may form a trading range to the market. It's a week ago Thursday, basically 10 days ago. This wide bar with large volume. Okay? Large bar with large volume. Tell the large story. Okay? And you see the high end close, let the lower end close. High end, mid range, low end. Okay? So in this time, so range wise, there is no really rhyme or reason to the closes. It's the day's news, bullish and or bearish. Okay? So closes and trade ranges, as you know, don't mean a lot. You're on the left hand side of the chart, right? Okay? So we're getting this up, down action. We're getting somewhat clustered closes for that close on Thursday. Up or down to the market. And that's last Thursday's form that trend range we expected to. Why is that important? It's important because if we know that a trade range is going to happen, then we're comfortable in selling the up thrust and buying the spring, right? Also, when it gets to those levels, we're taking profit off, or at least protecting, right? Very much so, and protecting the market. Okay? Very, very important. So we're in a situation where we're mid-range and with no edge. So then what do you do then? Well, we talked about before, you go to a small time frame, right? And see if you see any edges there. The smaller the time frame that you use, the less accurate for trend, right? Longer term trend is much more important than short term trend, right? You make quicker decisions by the small time frames, and they're not always go in coordination with the CM things of absorption or distribution, right? Market be rallying for them to get short. Market may going down to get long. They may buy it just to get long when the market bounces. Okay. I'm saying that if you go to a smaller time frame, the smaller time frame you go to, the worse you get in the longer term trend of the market, right? So you always want to start out with your long term and go to short term. But my point is that the longer term that you use, the more accurate the trend of the market is. Okay? So when we get a long term trend, the longer term trend that we get, the more important, long term, obviously, the more important obviously the trend is. When we have close on a daily chart and type of thing, high, low, high, low, high, low type of thing, the market's just building calls on short term. So if you're not an edge on a daily chart, you go to the smallest time frame that you feel comfortable, right? You trade a smaller term, but they're also quicker, right? Quicker decision being made, right? There's that. Okay. So you'll see a lot of spikes in markets. You'll see a lot of close in markets that are, wow, the market goes on close. How come it didn't, here, market close. This is where people get caught up in patterns. But here's an up thrust, okay? Clearly an up thrust, okay? If you sold the market here, which I'm not saying is a bad move here, okay? In hindsight, it was a bad move. If you sold the market right here, your stop becomes right here, right? So, a decent amount of risk, right? But as an up thrust, it's fine. You could take this up thrust if you have cause built. You do have cause built, okay? In this case, how would you know this market's going to up thrust and spring up thrust here and go lower? There's no way you know that, right? It's in the chart. Okay? So, even though this is a decent trade, maybe a trade down to here, right? Because it's bar, right? The possibility of the market doing this was not really likely in my mind, right? Because it's the action here. But there's some type of news that happened in the market pro card, right? Okay. Any question there? Good. Right. That was Friday's jobs report. That's correct. That's correct. So how would you handle? So let's suppose you're right here, and this is at 7 o'clock. Okay, this is just take it from here. Okay. What would you if I just showed you this chart in a quiz? what would you think of the action here? You would think it's on the right hand side. You would think the right hand side of the market, and this is distribution because of the supply bar right here. Expecting a retest maybe back down to here, right? That's what I would think, right? It's logical. Weakness, 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 right? It doesn't look like absorption. It looks like absorption here to the upthrust. The question is, did the volume come in? It's the middle. It's 5 o'clock in the morning. The volume actually did come in pretty heavy, right? Relative to the area, right? Market upthrust. Market actually went to the target zone here. Okay, does that make sense to you? So if I'm going to do this and I see a report that's potentially being volatile, either I stay out of the market for safety reasons, right? Nothing wrong by staying out of a trade if you don't know. And two, if I'm doing this, I got to make my stop away from my danger zone. Maybe this gets hit, maybe they don't, depending on the market wise, okay? Let's suppose it does get hit and it runs here. You just let the market, it's on the left hand side, you let the market trade and give you an indication of what happened, right? You have to wait to see. I'd be concerned about deleting more from downtrend to see the next bar. I prefer to see the bar. I see we're talking about 30 minutes. I'm talking about the chart right here. Okay. So the market then goes up, gets sellers, then gets buyers to the market. And this is Friday's report, right? And the market eventually, this buying tail led to a trading range. Okay, those are areas that the market has to get above or under to really cause problem next leg there. But you can see the market basically stayed flat, and at the end of the day, short covered and it goes higher. Short cover is buying the position you sold first. So this chart is still friendly, but the reaction to the creek is very important, right? Good. Let's talk about the Nasdaq a bit. Nasdaq's very interesting, right? Nasdaq, what happens when the market has marked down there and market straight down, we tend to form some type of trading range. Okay? So after the selling occurred in the market, sold, the market took a very, very long time to retest the high, indicating the lack of really true buying coming to the market, right? Right? So the fact that the market can't get above and stay above, I know that unfortunately, every team in the East now, AL East, will not finish in last place. That's what Cutler did to the AFC East. That not every that nobody will finish in last place except the team that Cutler's in. Actually, I think it'll do okay there. But anyway, you have these sharp breaks. No, it's 7 million plus incentive, up to 10 million. But the market here, you see the market breaking and selling market. There's really no edge. But what's important is that this area here that held the foundation here did go up, make new highs. So this was actually the breaking of the ice. And you see the selling here, the lack of upside demand here. Even though it was here, we didn't run away from Creek. The retest lower, and now you're playing. And now you're playing around doing very, very little to the market. So what does that tell us? That tells us that the market's in the trading range. But because we are on the right-hand side, right? But because the market is on the right-hand side of the market, which it obviously is, right? The right-hand side of the market, right? We are not in a position of mark up and mark down from this area, are we? Right? From this area. In other words, we're still in the middle of a trading range, right? We're still in the middle of a trading range in the market on the right-hand side. So you don't have an edge yet to the market, do you? We do not have an edge left to the market. We have buying and selling. So what do we need to see? Either some type of a demand bar on the right-hand side or supply bar, or absorption to the creek area, or reverse absorption to the downside. Okay? So it kind of looks like now we maybe, that's what, if you just take this market the way it is, this would be some type of vertical absorption, right? It may be too middle of the range to be a vertical absorption, but that's what that could be, right? So we have to see the market wise. But again, I want to see a little smaller view or a little from a shorter trader. I may see more things on a small time frame. Okay. So we have to see how it handles the creek area or the support area on the way down. Okay. So may play around here a little bit, see what happens. So we wait until we see the edge of the market, right? Wait to see the edge of the market there. So you go down to this time frame that makes sense. Okay. Nice. I thought it was up to 10 million. That's nice. It's a good deal if you can get it. So we have to see. So we still wait on that. Okay. Sometimes the daily upper chart becomes more clear, and it's just waiting for the smaller time frames of the market to catch up, right? Don't know, but that's many times it happens. I think his wife made more than he did. So anyway, just like your quarterback's wife makes more than you got. So we wait and see what the market does over the next, probably maybe this week, maybe longer. Okay, but what's important is that the market now got to the point where we built this cause built in the market. And because of this cause built in the market, we can look for some type of ending action. Or not ending action, but some type of edge action to occur. right? And that's what's very, very, very important to see. Okay? Very, 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 very important. Okay? So we'll say that works out. So be careful of markets that are not in the ready position or markets that are creek and ice. And maybe we'll talk about that on Tuesday about the ready position type of thing. Okay? We'll see. Okay. I want to talk about something in the metals. We talk about, and every in the world wants to be long metals. One of the things that's really important to remember is, we'll talk about this again. This is it's one of the best conversation. As a matter of fact, you know what? We're gonna talk about it on Tuesday. It's a topic I haven't done in a long time. And we're gonna talk about money flow in markets, money flow in markets, because I think it bears really before this stuff starts to move. We had a good conversation about bonds. We'll talk about money flow on Tuesday, about where money is going. It's one of the best topics. But at least most people like that topic. Okay, got other things for that. Okay, but but the market now in gold, yeah, it's a really good time. Market now in gold is a situation where if you look closely, we are making a little bit lower, making highs that are equal, right? And we're making take these lows here, and we have some sort of obviously some type of trading range, okay? And this is why trading another range could be dangerous because this really means nothing per se, right? Put down, then up, just normal trading. Yet the market goes, we think the market go up here, or the market go down there. We don't know which could happen first, do we? That's why there's no edge. Right? You can scalp it a little bit, but you're not going to take it as a position because you're not really up in the market as far as bullishness. But you're not really bearish as well in the trade range. Very important. So in gold, the largest price bar was to the downside. Mark that across. So we can see that the market basically held the selling bar to the market, right? Retested here, and this is where the stop would be under the market, under this 1243 even area. This is where the market got some demand to go higher. The lack of markup here means that the market was going to retest lower, obviously. This was a key swing on Thursday. There was the potential of a thrust, spring, high and close. Friday proved that that market wasn't true. Okay, very important, right? So in the middle of like I see your charts, we'll do them probably on Wednesday. Okay, maybe update them. Okay, um, but I'm gonna go to the site to people see it. But But here you have a lot of markets here in the metals that have not really performed well. With the euro going higher, right? And the metals not going higher. And Mike has these miners, does a lot of stuff on his website, and we'll go up there before we leave, but we have the miners not doing well. You see the market overall. Okay? In the market now, gets to the point to where what? To where markets in no man's land. And we can go back up to here, we go back down to here very easily. But there's no edge to the market, right? There's no edge to the market. That's what's really key here. There's no edge here to the market. Okay. So we will see how the market acts. The market had some increasing volume on Friday with a lower close. And now it will be to see if the supply comes into the market, selling pressure, or the market shrugs off Friday's action and goes higher. That's not the most likely scenario though, right? Okay. So we have to see. That's what's about strength and weaknesses in money flow. You're starting to see a lot of money flow and not into the metals, right? So let me real briefly go over silver. Silver is weaker than gold, right? Silver on Friday see an upthrust of silver, clear upthrust on silver Tuesday, Thursday, Friday, Wednesday, Thursday, Friday, Sunday, Friday, Thursday, Wednesday. So Wednesday was upthrust. Okay. Any questions? That's a clear uprush to the market, obviously, right? And look at the volume come in. It dried up on the rally the day before. So this is selling stopping action, right? Increasing volume, close low, up the rush, type it down. Market then try to go up the next bar. Bottom was smaller range, lighter volume, lack of demand after the market sold off. Thus left the upthrust. Okay. But you can see that the silver market is a bit more bearish, okay? I want to go over copper because copper had a lot to say with the market wise, right? Copper is on the right hand side with cause. Right? They have that markup, really nice markup. See, this is kind of like vertical absorption here. They'll have the markup, right? Okay? Does that make sense to you? You see the large range here on the right hand side of this market? Okay. So we see the increasing volume, jump over the creek, market clustered wise. The market is holding very well above the creek area after the sign of strength was formed in the market. Everybody see that? Good. So what is important is to see if we hold it, if we don't get supply. The longer we don't get supply in the market, the more likelihood this market has sign strength, absorption to work itself higher. Yeah, there Freeport McNamara is affected by copper a lot, but they have other factors involved in it too, right? That make up the stock price. Some stocks, are basically more dependent upon what gold does, or silver does, or copper does. Some are more aligned to the whole industry. I think Exxon would be one of those stocks too, right? With so many things going on. I would think Exxon would, right? So that's what's really, really important, right? The bonds, my thoughts, people that have been with me last Tuesday about my bond thoughts, about what I think is happening. Very important. Okay? So now that we're here, type of thing, Mike had some charts to his website, and I think it's who's this, to look at that stuff um, chart wise, because we went over some charts last in the market wise. Okay, so this is Mike's site, the Wyckoff student site wise, and get a chance to look at things market wise. Mike does the stock charts for us, and he has his website that does his thing. Uh, Very good action, following some really stocks that really show Wyckoff wise, right? A lot more stocks than commodities, and you can. We won't. I'm not going to go into detail with this stuff, but you see Microsoft, right? You can do one of these things market wise. Twitter, Twitter entry stock wise. If you notice in Twitter, we had a market that went up, stopped in the middle of the range, so some stopping action. Then try to go up, finish low end. Then try to go up with no demand. Went lower, took out all these lows, and then gapped. Okay. So what is key is, and the key if Twitter starts here, the selling here, or some type of preliminary supply in the market. I'm just going to go overall. Buying climax, and remember this gap in the stock, that gap in the stock market, and this becomes a sign of weakness here because you get the large volume after the preliminary selling up. Market breaks, high volume, largest range. There's your weakness there. And now the market's very weak. Okay, very good chart. There's a chart that I want to show you. If the market, if I get this up here. It's actually General Electric. And this is live. And Mike had brought this up, and he brought it actually my attention. Mike actually was short and everything else. But this is bearish behavior. And what my point is, though, is this market's forming a lower trading range after selling in the background. Okay? So this creates a negative background to the market. So the proper Wyckoff trade is to be short. Obviously, if you gap buyers, for not. But for all you know at this point in time, right? Anything obviously can happen. But because the trend is to the downside, and because the weakness is weak after selling in the market, then the odds more favor downside versus upside. Also, we get demand, right? Kind of like opposite the stock market, the market was. Okay? Very, very important. Very, very important. Okay? It's the reaction after the market that becomes really, really critical to this particular chart. Okay? Very, very, very important. It's not so much in a market breaks. This is very important. In a bullish market, that's the concern, right? It's the reality back up that's important because once you kill demand, you cannot get money back into the market, right? Once you lose that demand and selling takes over, it takes a lot to overcome that. Okay? So this is why many times the CM will defend a market and not let it mark down because they may be long. Okay? They may want to be long. They may want to control the market to the upside of the market. When they allow the market to mark down in the market, they're not willing to defend the market and keep that range technically. Okay? Two, market wise, and there's a supply that comes to the market. Okay? Very, very, very important. The not that the market broke, but the response back to the market. Okay? So that was something that's very important. When I got you here, I want to show the Microsoft chart without lines. Okay? And what's interesting about Microsoft is the fact that the market failed to mark up here, sold off, and the market's going sideways without the demand happening. And Friday was a very, very telling story in the market, right? The market tried to go higher, the volume increased, and the close was mid range. So would you take that as a bullish or a bearish market? It obviously would be some type of bearish market because you got selling in the background, the market try to go higher, and the market cannot. Now the trend is up just because it's bearish action. Okay? But the trend is up, and we still need supply to the downside. But it looks like it's turning over from echoes. Okay? So we have to take out the previous low because those are where those stop loss orders would happen to occur with, right? So we have to see. If we extend this out in the weekly chart, we will see the market has somewhat of a trend thrust, but there's no supply yet to the market. The lack of supply, the lack of supply in the market, the lack of supply in the market makes a very bullish statement to the market. Right? So sometimes you got to look at now the weekly chart, monthly chart of this still looks pretty good, right? But the daily chart looks like it may turn over for a second. We had crude oil had some type of rally, and I mentioned about the coupling. And I don't want to go into the stocks of it, but I want to show you this particular. There's Exxon, and the daily chart of Exxon shows something interesting, right? Market is going to spring down here, but the market's still relatively bad shape relative to crude, even though crude is not doing fantastically. It's doing better than the price of that particular commodity is. Okay? And that's what's very, very important, right? What are you talking about? Microsoft? Yeah. But Microsoft, daily had some selling, right? Yeah, Exxon is probably a good scalp point for seconds, right? That's right. That's right. Yeah, Exxon probably going to retest wise, but Exxon. Let me go back to Exxon. So this may have been some type of final little shakeout action wise, right? But yeah, Exxon still is bearish. I don't think this is selling. If you're going to look at this market, this is preliminary support and a selling climax, which is possible, right? So it could be the final stage, but who knows with this stuff. But I wouldn't. But you can't buy Exxon in the long run. I mean, you can buy it in the long run with the dividend and everything else stock wise, but you can't buy the stock, with a trigger necessarily to do it because you haven't gone sideways enough to make it worthwhile, right? So you all obviously need to have what? Obviously need to have some demand. Obviously, the demand in the market broke and needs to go higher, but you need to see all the demand rise as far as that goes, right? Very, very, very important. Okay, so we'll see. If you look at some of the oil stocks, we're going to do this on Wednesday. I'm getting way too far apart. You got some stocks that just act better. But I wanted to bring up Mike's stock things as far as that goes because cheeseheadcharts.com because you have a lot of stocks here. Uh, gold miners, Mike saying about gold miners being weak. See the weakness breaking down. This is really an interesting chart because bar by bar wise, you see poor closes here. See all these poor closes here at the end? These poor closes for markdown, right? I'm going to let you go through these things because it's too, it's a lot of charts to go over from the standpoint of bar by bar today. Hopefully, maybe Mike will get some. We'll go to these stuff and Mike's chart wise. You see a lot of stuff, a lot of good stuff. 12 charts. It'll take over an hour to get that done. Okay, so that's something I think is really important. Okay, so that was I wanted to show you that Mike's chart. Cheesehead.com and going back there. Okay. Any question? Any stocks? I mean, any questions on any markets that you have that's going on wise? From a standpoint of what's happening in the stock market, I was going sideways. The market's obviously looking for something, right? They're getting kind of used to, and the market have reacted to what's happening with Washington. Market, in my mind, works in spite of Washington. She's had. Hold on a second. No, it doesn't. Can't show it. I think I pasted, but cheeseheadcharts.com. Okay. He had it as deflategate.com, but he changed it. It used to be deflategate.com, but now it's cheeseheadcharts.com. I don't know why I changed it, but I don't know. So, but so go out and see that stuff. Even the S&P. Okay, what I wanted to see market wise is that on the right hand side of the daily chart, high ankles, low ankles. What's really key now, okay, is we really don't have an edge here, but really, really key right now is this. Is this trade range that occurs because you know the stops are at, cause being built in the market. This is not really a situation where this looks like absorption doesn't, because the market closes are different, right? If we get a couple and the high end closes here, it'll be absorption to go higher. If you get supply to come to the market, okay, you can see the supply comes to the market, then you have a different ballgame, right? So we have cause. If you look at the market from here, you basically from July 19th till now, you basically have gone sideways and done nothing. Very important, right? Gone sideways and gone nowhere for the last basically 3 weeks, right? Very important, right? So yeah, so we talked about this. Remember last week we said this area would cause some type of trade range, right? Remember last Sunday? We know from last Thursday, but last Sunday we said the trade range 1, 2, 3, 4, 5. Market closed here. We said trading range. In the market, is vertical absorption does not need a sign of strength, but must need a sign of weakness, right? Must need a sign of weakness. Does not need a sign of strength because the trend is up and demand to improve itself. Okay, any other questions? Tuesday nights, money flow, gold and silver, people, in the 7 o'clock Chicago time, 8 o'clock Eastern time, 5 o'clock on the West Coast. Wednesday, stock night in the public room. So one is going to be in the member room on Tuesday and private room and public room on Wednesday. Okay. Everybody have a great, safe evening. God bless everybody. Be well. Hopefully see the chat room tomorrow. If not, hopefully see you on Tuesday. If not, hopefully see you on Monday. On Wednesday. Have a great night. Thank you so much. God bless everybody and be well. And we'll talk to you soon. Thank you so much. Thank you, David. Tom.